Here's the Elliott wave forecast from May 25th, 2012. On the Dow 30-day 1-minute chart, it has the appearance of from 13,350 of wave 1, wave 2, wave 3, wave 4, and this triangle is, the fifth wave is a very unusual formation, and it's pretty sideways, and it's hard to put a bearing on exactly what's going on. But thanks to the futures, if the Dow can gap up above 12,570 somehow, that can set up an upward 2 reversal, and this fifth wave could be over. So that'd be 1, 2, 3, 4, and 5. If you can somehow take out 12,570 in the Dow, and gap up and sustain. If you can sustain, there's a possibility that we can get an upward 2 to retrace the entire drop from 13,350 to 12,320. Full upward 2 would retrace to as high as 13,000 in the Dow. That'd be 1, 2, 3, 4, 5, and 0.618 to around 13,000 at best this week. But if you can't sustain, though, it could be a double top 4 before a 5 down, and that's the worst case scenario. For S&P, best case scenario, this is 1, 2, 3, 4, and you got a truncated fifth wave. And futures are gapping up about 9. At one point, they're up 14 this morning, around 4 or 5 a.m. They're up about 13 or 14, the S&P futures. But right now, it's up about 9. So we could actually take out 1328 at the open. And if you can clearly take out 1328 and sustain it over 1340, there's a shot at to as high as 1375 and a 0.618 retracement of the entire move. The entire drop from around 14 approximately to around 1295 in the S&P. So that'd be 1, 2, 3, 4, 5, and a potential upward 2 reversal to at least 1370. For NASDAQ, best case scenario, though, this is 1, 2, 3, 4 truncated fifth wave. And futures are gapping up about, I believe, 22 in the NASDAQ. So there's a possibility that we could take out 2862 the top of the 4. Worst case scenario is that we hit 2862 and then drop in a fifth wave and fade, and the rally fades, which is very possible since we've been seeing that fade every morning for a long time. But if this is a sustainable move, and we take out 2862 and eventually 2900, if this turns into a sustainable third wave type of rally today, we can rally to as high as 2980 in the NASDAQ. That'd be a 0.6 retracement of the drop from the C wave down from 1, 2, 3, 4, 5. So 2980 is a possible scenario if we can close above 2862 in the NASDAQ. For NDX, best case scenario, this is 1, 2, 3, 4 truncated fifth wave. Actually, on the NDX futures, NASDAQ would be approximately up about 25, so that would take out that previous top of the 4. But NDX is gapping up about a 22. So it should attempt to take out 2560 in the NASDAQ and NDX. If we can sustain a move over 2560 and close above 2560, the shot at as high as 2660 and a 0.6, and a 0.68 retracement in the NDX. That'd be 1, 2, 3, 4, 5 truncated fifth wave and a 0.68 to run 2660 in the NDX. So basically, what I'm trying to say is that the C wave could be near the completion of 5 waves down, 1, 2, 3, 4, 5, in all 4 indices, and we can get 0.68 retracement minimum this week. It's a wrap.